and welcome in this video. We are going to explore together the different steps in order to develop an efficient algorithm for algorithmic trading. The workflow structure will be divided in 4 steps. First of all, during this class, we'll learn how to import data from different data sources in order to have the right market data. In the second time, we will develop different algorithms such as Ishimoku Kinkoyo, Bollinger Band, or how to develop a momentum trading algorithm. Once the algorithm will be built, you will need to backtest it, which means you will need to test this algorithm with previous market data in order to check if you implemented this algorithm in the past, if you raised money or if you lost money. And at the last step, it will be the implementation with a real broker in order to trade in real time. Concerning data import, in this class we are going to cover these 4 different data sources. First of all, Quandl. Second, Alpha Vantage. Third, Yahoo Finance. And in order to conclude, the last one is Quantopian. Quantopian is a little bit specific because the data will come mainly from a data pipeline with the entire market data. You will need to filter it on the second time. That's why I want to consider Quantopian by another way. Once you import your data, we are going to develop our algorithm by using Python language. We will use Jupyter Notebook because from my point of view that's the most efficient in order to be able to take a look quickly and efficiently about what's happened with our data, but you are free to use different platforms such as PyCharm, Jupyter Notebook. You have multiple ways to develop your algorithm, but what it's important to take into consideration here is like this course will be how to develop an algorithm by using Python. Once we are satisfied with our algorithm, we will do some backtesting. Essentially, we are going to cover 2 types of backtesting. First of all, we will backtest with our Jupyter Notebook, which means with Python. Another way will be with Python as well, but we are going to use Quantopian platform because Quantopian provides you directly at the same time S&P 500 index in order to check the results and to compare your results with S&P 500. Because if your algorithm is doing less return than the S&P 500, that's even better to invest in the index, and that's gonna be a good way to compare our performance with the real index. Furthermore, Quantopian provides you different financial indexes and financial data that will calculate your error margin, the volatility of your algorithm. That will provide you as well your Sharpe ratio, which is a very interesting index in order to check the risk of your algorithm that you just created and to judge your algorithm, because okay, an algorithm can do very well, but that's better to have the best Sharpe ratio as possible. But we are going to cover the Sharpe ratio definition in another chapter. And once you backtest it and you are satisfied about your algorithm, we are going to implement it. In the next 3 videos, we are going to cover one by one the different data sources, which are Quandl, Panda Data Reader, which will cover data through Alpha Vantage, Yahoo Finance, and Google Finance, And when we are going to backtest our algorithm, we will cover how to get data through Quantopian and data pipelines through Quantopian. So let's discover that together in the next videos. See you guys.